Meta, one of the other most important companies in the world that you got to be in with, right? Meta and AMD have significant partnerships focused on AI infrastructure, with Meta using the AMD EPYC CPUs and Instinct GPUs to power its data centers and AI services like Llama 4. And keep in mind, you know who's going to be a big customer of the 400 series? It's going to be Meta. Meta's going to end up being a big customer, one of the biggest customers out there. What about Google? You want to be partnered with Google? AMD and Google have strategic partnerships where Google Cloud uses AMD's EPYC processors to power its virtual machines for a wide range of workloads, including general purpose, compute, optimize, and AI tasks. Guess who's going to be a big customer of the 400 series? I think it's going to be Google. Elon Musk, just last month, actually had some words about AMD. He talked about AMD is now working pretty well for small and medium-sized models, right? Elon Musk has always had a very close relationship with Jensen over there at NVIDIA, obviously, right? But even Elon Musk is like, dang, AMD is starting to become actually a player here. Like they're actually, like he's starting to have a lot of respect for AMD now at this point in time, right? Just wait till he gets his hands on the 400 series and what happens there, right? And Elon Musk is a very important player in this market, not just through Tesla, but through XAI and other companies as well. So very important. You want to be in with somebody like Elon as well, right? Look at this here. Build AI anywhere with the ROCm software. AMD and Microsoft bring cloud to clients. This just came out back in May. Client power to developers. You want to be in with Microsoft as well, right? Sony and AMD tease the GPU, their tech they're building on for the next PlayStation. Exciting. What about the next Xbox? Oh, Xbox and AMD advancing next generation of gaming together. This is back from June, right? So next generation PCs. We're talking AMD and how they push that forward. Who is AMD not hooked up with? They're with every. They got a relationship with Microsoft. They got relationships with Sony. They have relationships with Meta, with Google, with Elon Musk, right? And his companies. Like they're in with everybody you want to be in with. And they're just going to get closer and closer in regards to this whole situation, right? Now, you look at the run in AMD stock. It's been significant. The stock year to date is over doubled, right? Crazy. Great year, right? Like if we can all get into a stock that doubles every year, like I think we'll be doing all right for ourselves, right? Big run. But keep this in mind, right? Look at a stock like Palantir. Palantir was kind of a thrown away stock, just like AMD was, where no one was taking it serious. Then all of a sudden, Palantir starts to come in with major growth rates, and all of a sudden people are like, wait, this Palantir is kind of impressive. Oh my gosh, like, wait, they got some actual great products and services in the market. Oh, they're actually becoming a very important company, right? And everybody starts to rush into them. So look at how much that stock's up this year. 145%, actually significant outperformance over AMD, right? But that was after the stock was up 300+% just last year. And after the previous year, the stock was up 170+%. So you look at somebody like myself sitting on like a 2,000% gain on Palantir, like these stocks, when they go through this sort of cycle, it has a multi-year move. It's not just some 6-month move or 9-month move. When you had a company that was thrown out, and then all of a sudden they start coming in with the growth rates, the products and service, everybody starts to respect it, they go through a multi-year move. It's not like this is just some little short-term thing and then it's done. No, it's a multi-year move, right? I want to show you this because I think it's very important for context around AMD and its stock. From Q4 2021 through now, AMD has barely beat the NASDAQ. If you want to know how early on in this move we are, this is pretty interesting, right? AMD, since that fourth quarter of 2021, stock's up 63%. The Qs are up 57%. It's barely outperformed the Qs in regards to this matter, right? I think that's pretty darn significant, right? What I'm showing you right now is Meta stock. Meta stock was another perfect example of a stock that was thrown out, and then all of a sudden they started coming through with the numbers, and everybody's like, oh! From the fourth quarter of 2022 to the first quarter of 2025 on that massive move Meta had, Meta stock went up 450%. 450%. The 2 to 3 year moves, when you're talking about a company that's been thrown out to start reporting great growth rates, which is exactly what AMD has. Company that was thrown out, people were I listen to Stacy Razcon on the Reaction channel. Jeremy Lefebvre makes money, right? Always reacting to these Wall Streeters. I listened to that man. It was just like in the last 3 to maybe 6 months or so. I reacted to a video where he said, I don't even know if we need AMD, right? So disrespectful. Like people were just throwing that stock out. Like it was a nobody. Like no one cared about them. They were irrelevant, is how the Wall Streeters would pitch them. They're an irrelevant company. Doesn't look that irrelevant anymore. Right? And so we got a situation here where this stock's likely going to go through a 2 to 3 year run that's going to be incredible. And that's what these sorts of stocks do, that are thrown out and then start reporting great growth rates, right? And as we witnessed, obviously, with Meta and countless others. Look at SoFi. SoFi is another great example. You have people trampling over themselves to pay nearly $30 for this stock now at this point in time, right? Up another 3.3% here today, up another $4,600 on SoFi. I'm now up 250% in the public count on SoFi, and that was a small position for me, right? I was buying the stock at this time last year, October of last year. You know how much I was paying for the SoFi shares? $7. $7 I was paying for SoFi stock at this time last year. And now that stock, people are running over themselves to pay close to 30. Don't be surprised if SoFi is over 30 before you know it, right? Especially if they come through with insane growth rates again next earnings. Isn't that incredible? That's how fast it can shift. Where people are like, people didn't care about SoFi stock last year, like $7 stock. I wouldn't even pay $7 for that stock. Those same people that wouldn't pay $7 for the stock last year are now willing to pay $29. It's incredible how fast things can shift in regards to the market, in regards to these stocks. People don't care about it. They start coming through with the growth, and all of a sudden people are like, maybe there's something here, right? What do you think AMD is about to have? Massive acceleration of growth. And as that growth accelerates quarter after quarter after quarter, people are going to say, people will be running over themselves to buy AMD at 300, at 400. The same exact people that back in April wouldn't pay $85 for the stock. The same people that a few months ago said, I wouldn't buy AMD at 110. Will be the same people buying at 300, running over themselves. Oh, 330? Give me it, right? ELF's another great example. That's a stock I'm up 1,586% on the public count, right? ELF was a forgotten, kicked around stock that I bought for $7 back in 2019, right? No one cared about ELF. They were reporting bad numbers. People thought they were irrelevant in the marketplace, and they turned the ship around. Terang did a phenomenal job with the company, and now people are willing to pay $122 for that stock. And won't be long, people will be willing to pay $200 for that stock. Can change quick. Very, very quick in regards to stock market, right? Celsius, another perfect example. Look at that stock at $63 now, right? We're up 159% on that stock, up $155,000, up another $5,600 today. Look at this stock this year. I'm not taking you back 6 years ago. I'm not taking you back 12 months ago. I'm taking you back just a few months ago. I was buying Celsius shares for $21.95. I was buying Celsius shares for $22.99. This year, just back in February, people threw Celsius out. And then all of a sudden, Celsius makes a deal. They turn around the business. The growth rates explode. And now people are running over themselves to pay 63. It won't be long. And then people will be running over themselves to pay 100 for it. All-time highs for Celsius. It can happen quick in regards to the market, right? So let me share my bull case, base case, bear case in regards to AMD and kind of where I see the stock going. And we'll talk a little deeper about the move from here, essentially, okay? So we're looking at 1000xstocks.com, right? This is where I run all my projections for all my companies. I'm looking at my bull case here. So this is if things go a little better than I expect. This would be a situation where the company does 40% revenue growth on average per year over the next 4 years. Keep in mind, ladies and gentlemen, if you look at NVIDIA's revenue growth from 2022 to what it's going to be 2026, they're going to average a far faster clip than 40%. So I have AMD's best case scenario under my scenarios still being far inferior to NVIDIA. So keep in mind, if they were to post any sort of numbers around what NVIDIA has posted for revenue growth, then they would blow away even my bull case, and we'd be talking about a stock that will be $1,000 plus probably within the next 24 months. But I'm not taking it that far, okay? My bull case has 40% revenue growth per year on average in the next 4 years. 50% net income growth puts them at net income margin of 22%. Check out NVIDIA's net income margins that company's been posting. Like we're talking NVIDIA's been like doubling up those sorts of net income margins. So even as this company gets way more profitable, my net income margins here are sad compared to NVIDIA. So we have a potential here where there might be more upside to revenue over the next few years than I have for my bull case. And there might be significantly more upside to net income margins over the next number of years than what I have here. So understand my bull case I'm showing you, which shows you the stock could produce incredible returns, it could be conservative. What if AMD gets to 30% net income margins, 35%? I haven't even factored that in under my bull case. So what I'm showing you right now might actually end up being low. Just keep that in mind. But this is still, I'd rather be conservative under my bull case, right? And this puts a stock at $1,000 plus stock come 2029. Okay. What about my base case for AMD stock? In my base case, this is just a fancy way of saying what I actually expect. I expect them to do 35% revenue growth per year on average for the next 4 years. Okay. 45% net income growth. Once again, 22% net income margins. Of all of my numbers, that might be the one that's the most low. I look at 22% net income margins, and I'm like, dang, man. Like, based upon what I'm seeing from NVIDIA, I'm like, there might be a potential AMD gets to like a 25 or 30% net income margin. There might. I don't want to bank on that, but that's the one number I'm like, I might end up being way off in regards to that. Like, they might push 20% net income margins sooner, like as in 2026, 2027. And then out here, they might be pushing 25 or 30% numbers. So if they're growing 35% top line, 45% bottom line, 50 to 60 P is very fair for a company like that. And we're talking about this is a stock, 3 or 4 years from now, that's a $700 to $900 stock, right? A stock that we can talk about, in 2026 probably goes 300 plus. And a stock we can talk about 2027 could go $400 or $500 a share, right? Under my base case. Now, my bear case, this would be a disaster for AMD. Only 20% revenue growth per year, 25% net income growth. Like, Lisa Su would be ashamed of herself, I'm sure. And the whole company would be ashamed of themselves if they only do those sorts of numbers. Puts them at net income margins of only 20% come 2029. And we could be talking about a stock that's basically flat over that time. But very low probability. What's the chances Lisa Su would not execute over this next 4 or 5 years? Based upon everything I'm looking at, they're executing on a very, very high level. So I have no disbelief that they're not going to pull this off. I think they're going to do it. And
hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer.
Okay. Next up here, Adobe. What's going on here? Where's the stock headed? Well, they got a multitude of bad news. Adobe launches AI assistance for Express and Photoshop. Adobe now lets you generate soundtracks and speech in Firefly. Adobe to release AI-powered video editing system, Project Frame Forward. Wait a minute. Okay, that wasn't the bad news. Okay, here's the bad news. Adobe stock is down despite analyst praise. Okay, wait a minute. Adobe CEO says the stock is undervalued. Okay, wait, that wasn't the bad news. Okay, here's the bad news. Adobe announces YouTube Shorts creation tool in Premiere. YouTube Shorts will integrate Adobe's Premiere video editing tools. Wait a minute. Okay, that's not the bad news. Okay, here's the bad news. Adobe might have just solved one of generative AI's biggest legal risks. Shoot. Oh, there's no bad news in regards to Adobe. It's the same fear-mongering stuff that we hear quarter after quarter after quarter. They're going through this same exact thing that guess who just went through this whole cycle? Google McDougal. Google McDougal just went through this whole cycle. And now everybody doesn't care about all the fear anymore, right? Because Google just kept coming in and putting up their numbers and putting up their numbers. And so all Adobe has to do is just come in, put up your numbers, quarter in and quarter out, and guess what? People are going to love your stock. They're going to finally get off this bearishness that they've been stuck on here in regards to Adobe, right? So Adobe, here are my numbers for Adobe. These are not crazy numbers. This is my bull case. 10% revenue growth, 12% net income growth, 25 to 30p. It's kind of a SaaS play, recurring revenue business model, beautiful business model, right? Asset light. Get a 20+% CAGR in that sort of scenario. My base case for Adobe has an 8% revenue growth, 10% net income growth, not crazy numbers, 23 to 28p, 15 to 21 CAGR on this stock. it's a buy. You know what I mean? Like, it's not the most complicated thing in the world. And remember, with my numbers, I haven't even factored in if they actually are a huge beneficiary of AI. My numbers are factored in that, if anything, AI is a little disruptive to certain practices or business models, so it hurts growth rates a little bit. That's what my numbers are based on. And like, we don't know, like, with how much Adobe is innovating here, like, they don't just have all that team there for nothing. Like, maybe AI is actually a beneficiary. Maybe they start growing 12% revenues, 15% revenues, 20% revenues. We don't even have that in the numbers. Do you know what the CAGR will be if that happens? We're talking 30 and 40% CAGRs if that happens. So that's not what I have, but even with my sleepy, boring numbers, it still should be a huge moneymaker over the next few years. Okay. Oh boy, Adobe. Okay. Meta. Okay. Big dog. Okay. Here we go. Meta, the big dog. Okay. Alrighty. So first off, Meta, great revenue growth from this company. Look at this. Look at this. Revenue growth went from $40.5 billion to $51.2 billion, right? Cost of revenues increased for the company like you would expect to $9.2 billion from $7.3 billion. R&D was up a lot. It's a $4 billion move. I mean, run that on a percentage basis and you should be, somewhere in the, that would be what, a 35% growth number, somewhere around there roughly. As far as R&D, it's a huge increase in R&D, right? Marketing and sales basically flat year over year. That's unreal. The fact that this company grew their revenue by close to $11 billion, $10.7 billion or so, and marketing sales was flat, legendary. Like, that was something you for previous business models, you never would have thought that was possible. G&A was a problem for the company. G&A basically doubled year over year, so that was a big increase there, right? So total costs and expenses went to $30.7 billion from $23.2. So expenses were a little high, right? And so if there's one thing you want to poke at for Meta, it's Zuckerberg might be going a little too aggressive with the expenses, right? We want to see expenses growing less fast than revenues, right? So income from operations still increased nicely to $20.5 billion from $17.3. Income before income taxes went to $21.6 billion from $17.8 billion. Now, they had this one-off here, this provision for income taxes. This was a one-off, massive, almost $19 billion hit, which killed their GAAP EPS. But if you look at their non-GAAP and you take out that one-off, like, it was phenomenal. So that's why I graded them a B- overall for this income statement here. Now, look at this. This is very important for all the longs that are in this stock for the next several years. We expect a significant reduction in our U.S. federal cash tax payment for the remainder of 2025 and future years due to the implementation of the One Big Beautiful Bill Act. So, tax is going to get a lot more favorable for Meta over the next few years, okay? However, the implementation also led to the recognition of a valuation allowance against our U.S. federal deferred tax assets, reflecting the impact of the U.S. corporate alternative minimum tax. As a result, the third quarter 2025 provision for income taxes includes a one-time non-cash income tax charge. Non-cash income tax charge. It's very key, okay? Of about $16 billion. Excluding this one-time tax charge, our third quarter numbers effective tax rate would have decreased 73 percentage points. Net income would have increased by $15.9 billion to $18.6 billion, and diluted EPS would have been $7.25 instead of the diluted EPS of $1.05. Okay, so the moral of the story is here: tax is going to be a huge help for Meta from now on. But they had to take this one very large non-cash income tax charge of about $16 billion. Okay? That's very important. Very important. Now, this was kind of shocking to me. Daily active people. So this is, people using all the different apps. They have Facebook, they have WhatsApp, they have Threads, they have Instagram, all these different products. Messenger. That actually increased 8%. Like, every time you think, like, there's no way Meta can grow the amount of people using their service. They do it. I don't know how they do it, but they do it, man. Like, sooner or later, I think all 8 billion people on the planet are going to be signed up for at least one of Meta's apps and use it on a daily basis. It's shocking. Ad impressions increased 14% year over year. Average price per ad went up 10% year over year. So basically they're showing more ads. People are likely using the products more often, so they're getting to show more ads. And then what they're being able to charge advertisers is a much increased amount as well, which keep in mind that's very important. Meta's spending a lot right now to basically get their get people to spend more time on their platforms, right? And show them content and stuff that'll keep them on the platform longer. That's how AI is helping them make more money. The second part is, right, so they can show them more ads. The second part is, Meta wants to essentially be able to charge the advertisers more and more money. How can you charge advertisers more and more money over time? Guess how? By making them more money. So they're using AI to hopefully show the right people these ads so companies can make more money off of those ads and get a better ROI on those ads, right? If they get a better ROI, those companies have more advertising budget to then spend with Meta and funnel it right back in. So if you're wondering, how is Meta like actually making money right now from AI and can continue to for the next year or two? Oh, let's not talk about what they could be doing with AI and how they could make money from that 3, 5, 10 years from now. What about right now and what about next year? Keep people on the platform longer, because you're showing them stuff they actually want to see, right? And keep them engaged in the platform. And 2, have your companies make more money so they can spend that right back with you, right? And you're going to be able to charge even more for ads. Very, very key, okay? Now, revenue went to $51.24 billion. That's a 26% increase, which is shocking, man, shocking. Now, this is the one issue I would point at Meta. Total costs and expenses was up 32% year over year. So that's the one thing I'm like, okay, Zuck, we're going a little heavy on the expenses here. Let's chill, right? I really want to see Meta be in a situation where they're growing revenues at a faster clip than expenses, right? I do not like to see those expenses rising faster than revenue. I'd say, if costs and expenses were up 20% year over year, or even 25%, I would say, okay, that's fine, right? Because the revenue number is a lot bigger than the expense number. So keep in mind, even if the percentages were the same, like let's say revenue was up 26% and expenses were up 26%, the raw number would be way dramatically bigger for revenue, because 26% of 51 billion is a lot more than 26% of 30 billion, right? It's just math. So that's the one issue. I don't like that the percentage is so much higher here, okay? So yeah, Zuck, we got to get that fixed over this next year or two. Now, additionally, you think about that revenue growth rate of 26%, they're growing faster than anybody in the space when it comes to Mag 7, except one company, and that's, guess who? These guys right here, NVIDIA, right? So Meta's the king. Can't call them the king. Well, NVIDIA is still the king of growth when it comes to Mag 7. They're the number 2 when it comes to Mag 7. So if you want exposure to Mag 7 and you want big growth, you know who to go to if you don't want to go to NVIDIA. And I understand there's a lot of fear about NVIDIA because like numbers might peak in the next year or two or things like that, right? With Meta, if anything, they're showing accelerating growth and they show consistency in growth, right? And so if you want growth and you want Mag 7, there's one stock you go to, and that is Meta. Now, when it comes to Meta, here are my numbers, my bull case, base case, and bear case for this stock. This stock is a steal deal buy right now, okay? On my bull case, I haven't grown revenues 20%. Keep in mind, the company just grew revenue 26%. So even in my bull case, I have them growing revenue significantly under what they've been putting up. Keep that in mind, okay? I like to do my numbers a little more conservative. This is my bull case. I'm doing 22% net income growth on average per year, 2026 to 2029. Getting a 39% net income margins, 35 to 45 P would be very fair for a company growing 20%. Top line, 22% bottom line, right? That would put the stock somewhere between about a $2,200 stock and about a $2,800 stock come 2029. My base case, this is what I expect for Meta, okay? 15% revenue growth. They just grew revenue 26%. I have them growing 1,100 basis points lower in my base case than what they just grew in that quarter. Talk about being conservative. 15% revenue growth per year, 18% net income growth per year, 2026 to 2029, 29 to 34 PE for the stock, right? And look what we get. We get a CAGR that's well into the 20s for this company with those, in my opinion, very conservative numbers. How are you not buying Meta right now? You got it. Like, do you like money? You like free money? You like free money, own Meta stock. You don't like free money, don't own it, right? The stock, in my opinion, is going to $1,000 plus next year in 2026, right? Bear case, my bear case for Meta. This would be bad. 10% revenue growth Disaster. All this money spent on AI and they only get 10% revenue growth per year? Disaster. Net income growth, 10%. All this efficiency they should be getting from AI over the next 4 years and they only average 10% net income growth? Disaster. Okay, got a company growing 10% top line, 10% bottom line, 23 to 28 PE is what you're going to pay for that stock. Guess what? I still get a 6% to 12% CAGR on the stock. And that's under a disaster scenario. When I can run my numbers and get performance that's likely going to be better than the S&P 500 in a disaster, gimme every share you got. Listen, say thank you. Say thank you to the algorithms, the algos, okay? Because as soon as those numbers came out, the stock went down 7%. Like literally within minutes of the numbers coming out, it was already down 7%. This was not humans deciding to sell Meta stock off. It was instant. As soon as that EPS hit from the one-time tax hit there, non-cash tax hit, right? As soon as that happened, the stock was down 7%. It was like, boom, right away, right? So say thank you to the algos for this move down if you're somebody that's been looking to build a position in Meta, because that's incredible, man. Like, you just got gifted. You just got gifted. That's the best way I can put it, okay?